Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 29th of March 2019, so welcome everyone. Welcome to this Friday's afternoon session, and also, Friday's last trading day for March here. So yep, welcome everyone. As always, before we start jumping into the charts, we need to quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, let's quickly jump into the charts. Now, the first one I want to touch on here is the Dow Jones Industrial Average Index. So, looking at this one, you can see that it since it peaked here around the 25th of February, the index was kind of failing to make some higher highs and was drifting lower here, trading below this downside resistance line. Short term, of course, very tentative one, but nevertheless a resistance line taken from the high of the 25th of February, and for now, of course, you can see that today it opened higher. It's trying to push high, it's trying to push up in the upwards direction, but it's currently sitting near its R2 around the 25,835 zone, approximately there. So for us, for now, we're still going to remain somewhat on the neutral territory, or should I say, well, in general, we will remain somewhat neutral, because for us, we need to get a nice good push above this, not only above this downside resistance line, but also above this level right here near the around the psychological 26,000 level. So very important area here. If we do get a nice pop above this, then yep, further acceleration to the upside could be possible. This is when we will target the 26,245 zone, approximately there, near those highs of February. But if that fails to withhold, yep, further acceleration to the upside again is possible, and we could see this one traveling further up here, but again, we're not gonna jump into that yet. Let's see what it wants to do first with this downside resistance line. Now, on the other hand as well, I just wanted to quickly show you that some of you probably could have drawn something like this here, basically, where you can see that the index is also coiling up and trading within this nice symmetrical triangle formation here. So basically, and now it kind of rebounded this week. It rebounded from the lower side of this triangle and pushed higher. So basically, long story short, guys, until we see a break out of this triangle, we're not going to do anything. We're just going to continue observing the price action and just stick around and wait for that confirmation break. So in terms of the downside, in order to kind of, let's say, be more on the cautious side, we would like to see a drop below the 25,205 zone, or even you could round it up towards the 200 level, because if we do see a drop here, not only that it will show that the index managed to exit the triangle formation through the lower side of it, but also broke below this important low area, or in other words, the lowest point of March here, and this way we could then target much lower areas like the 24,840 or even the 24,125 zone. So approximately there. This level here is a bit of a tentative one, so it's just a kind of a gauge, but the first one that we would be looking at here would be the 24,840 zone, approximately there. So keep your eyes on that, guys. Keep your eyes on this formation. Very interesting developments here on the on this American index here. Let's see how this is going to play out, but probably, like I said, better be safe than sorry and wait for that exit first before doing anything with it. Platinum. Now, a very quick update here. I was talking about this this precious metal this morning, and I was telling you guys to keep a close eye on the 845 level. So managed to travel higher, managed to break it to the upside, and almost actually managed to reach the 860 zone that I was talking about. So it kind of the commodity got held near its R1, today's R1, which was around the 855 level, 855, 56, something like that, approximately there, and from where it kind of retraced back down. Still this is all looking quite positive for platinum. We could see this one accelerating further. In a way, what we could do here is you can see that the bears are really trying to fight back here. What we could do, to be honest, what we could see here is another slide lower, potentially a retest of the 845 zone, and then a possible rebound and a push higher. Now, of course, don't get me wrong, we could see also a slide back down towards this upside support line, the short-term upside support line. Again, this of course, keep that in mind, but still the first one that we're looking at here is the 845, and then we'll see if it actually wants to slide lower or not, because like I said, this could be that nice area of support here, given the fact that back here on the 26th of March it also acted as a very strong area of support, from which it could rebound and push higher again. So that's why we're for now looking at this current picture. We are more positive than negative. Certainly the next target for us is the 860 level, and then we will target that long-term downside resistance line that I keep mentioning in my videos where I'm covering platinum. Basically, this long-term downside resistance line taken from the high of November 2011. So keep your eyes on that one. Let's see how this is going to play out. In terms of the downside, still we'll stick to the same idea. We need to see not only a drop here below the upside support line, but also a nice break below the 835 level, which yesterday acted as a good area of support here. So basically a nice good drop below this could open the path towards slightly lower areas, but for now it seems that the downside could be slightly off the table. USDCAD, now a very interesting pair here. Certainly got hit today. I was also talking about this one this morning. I was telling you guys to keep a close eye on this 133.70 level, but initially, of course, I was telling you guys from the very short-term perspective, keep your eyes on the 134.05 area, approximately there. So which managed to it got broken nicely here when the data came out. So basically, this is what you get when you have a worse than expected US PC deflator index and a better than expected Canadian GDP figures. So, and that's, like I said, that's what you get. That's what result you get, and you get the USD CAD sliding lower here, breaking not only this 134.05 level that I was talking about, but I was also telling you guys to keep a close eye on this 133.70. So initially, this was my initial target, and then I was telling you guys to we will take it from there. But you can see how confidently the pair broke it to the downside. So of course this is where it's currently getting held here near the 133.49.50 area, approximately there. The big question here is, of course, are we going to see this see a follow through here? Will we see a further slide towards this 200 EMA here on the 4-hour chart, or actually will this just stay here and the next big move will be something for next week? But also what's very important here, guys, is keep a close eye on this level here in the 133.70, because if the pair suddenly gets back above it and let's say closes the week here above this level, then well, it would confirm that the pair could continue drifting within this little range here between the 133.70 on the downside and the 134.45 on the upside. So we could see maybe like a bit of more sideways action here going further, maybe into next week. So, but that's, like I said, only in the case if we see this pair moving back above the 133.70 level and closing the week here somewhere, and then yeah, we could see, like I said, some more sideways activity going along into next week. But if this remains below the 133.70, then yep, I mean that's a bit of a good sign for the bears, and we could see this one traveling further down. The only thing is that for better confirmation of the downside, what you could look at here is if you take this, draw this little tentative upside support line as well. So in a way, basically, if we see a nice good slide here below this a break below this upside support line, this would also place the rate below the 200 EMA, which altogether could be seen as a slightly as a negative here for the pair, at least in the short run. And we could see this USD-CAD sliding further down here, initially of course aiming for the psychological 133 zone, but if that fails to withhold, then it could in a way travel all the way here towards the this long-term upside support line that has been running here from the let me just refresh that. I think that's February 2018. Yep, so the lowest point of February, basically that's what, since when this upside support line is running, or even we can call it a trend line basically. So could be a good potential area for a test, but only if we see a further slide here below the 133 zone. But again, in order to kind of see that level here, we need to see a break of the upside support line first. But again, I'll repeat myself. For now, the all eyes are on the 133.70, and of course, like I said, on this 200 EMA together with this upside support line. So let's see where this this week is going to close, where this Friday is going to close, where the daily candle is going to close, and yep, we'll just take it from there going into next week. GBPUSD, now a bit of a mess here. So this morning I was also talking about this one, and basically telling you guys that there could be a possible retest of this this level right here, but you can see how well it traveled higher, spiked higher, managed to also get itself back above this upside support line, but quickly the bears took control here, pushed the rate back below the 131 zone, and now it's currently sitting here between the 131 area and the 130.50 zone, approximately there. So still we're looking at this one from the more of a negative perspective, at least in the short run. But now, judging from the picture that we're seeing here, to be honest, it would be better to take a more safe approach here and wait until we see a drop below the psychological 130 level, because initially today, when we initially saw this slide lower, this is what the pair managed to hit its psychological 130 level. Probably there were a lot of orders, a lot of buy orders that were getting filled here, and that's why we saw this nice strong spike back up here to the upside. And yep, a lot of profit taking here, and now we're getting kind of in a way back to normal, back into this Brexit kind of cautious situation, cautious position here. Don't get me wrong, we do have a vote here today, but again, it's not the full meaningful vote. So I suggest you have a read about this. You can go and check us out here on one of our reports that we produced this morning, and basically check out and get a view on, get some details around there and around there. Around this whole issue, around the Brexit issue, and yep, then you can possibly react and see what you could do with GBPUSD further. But for now, from the very technical perspective here, basically a drop below the 130 level could open the path towards much lower areas, and then we'll target areas like the 129.70 or even the 129 zone again. But for now, this is where the pair is. In terms of the upside, we still stick to the same idea. We need to see a good push above the 131.60 level first before we can aim for higher areas. But looking at this current image, we are more negative than positive on the British GBPUSD. And the last pair I wanted to quickly touch on, and what that was Australian dollar against the New Zealand dollar. Basically, a very interesting picture here. So this is one of the ideas that we've posted here today on the on our Trading View account. Let me just quickly refresh that. So this is still from yesterday. So basically, this is one of the ideas that we threw out, and looking at this overall, still of course it's still trading below its downside resistance line taken from the high of August 2018, but it already, of course, it already knocked on the door of that line, tried to break it but failed. But still, it's kind of, on the other hand, to be honest, it's what you could see here is a nice flag formation. So we do have the pole, which was formed on Tuesday, and now kind of this little sideways action, sideways trading activity, and that's why we do have this this potential buy order here on the break of the recent highs here, this week's highs near the 1.0453. Now don't get me wrong, this is not sure, this is not guaranteed, because this is just an idea, so you still guys kind of, let's put it that way, act the way you find it most appropriate for yourselves. But basically this could be an idea here if it travels above this downside resistance line and also breaks above the 1.0453 zone. Now this could open the path towards higher levels, because the pair would confirm a forthcoming higher high, and of course we could maybe then be targeting areas like the 1.0530 or even the 1.0545 level, which is marked by the high of the 12th of February. This could be a nice idea here, but if let's say fails to drive higher, that's why we do have this stop loss here around just slightly above the this level right here around the 1.04 area, so 1.04 something like that here. So basically a nice good break below the 1.04 level could lead towards further declines, like the it could retest the 1.0365 area, or even it could go lower. So for now this is just an idea, guys. Of course, don't get me wrong, not always the flags work out the way they should according to textbooks, so still keep in mind that, and always have your stop loss in place, guys, so just to kind of protect yourselves against just unexpected moves here in the market. But again, on AUDNZD, that's the situation that we're seeing right now. We're not doing anything yet, because like I said, we're just going to continue observing the price action. But if this is going to start breaking the 1.0453 area, now this is where it could become a little bit more exciting for the bulls, so keep your eyes on that one, guys. Okay, I hope you found it useful. Thank you very much for watching and listening, guys, and if you want to join me next week, please do. I'm gonna just let you know that there won't be any traders tea time or espresso on Monday, so we will resume on Tuesday. And yep, please join me on Tuesday on my morning traders espresso, and yep, we'll pick it up from there and see how the markets are doing. And yep, for now, guys, I hope you have a wonderful evening, and I hope you have a wonderful weekend, and I'll see you next week. Thank you very much. Bye-bye.